Hi, Michael Glennon from Glennon Capital. Today I'm going to talk about a company in the portfolio. It's a new addition to the portfolio. We're quite excited by it. It's called Probiotec. So it's got a $150 million market cap. Share price is about $2. 12 months ago, that share price was 60 cents. So it's already had a good run, but we still think there's significant value there. So what the business does, it's a contract manufacturing and packaging business for pharmaceuticals. So some of the brands you'll know, I'll put a photo up of some of the things that it manufactures. It's got 3 businesses in it. 2 of those businesses have come about through acquisitions in the last couple of years, and they've been able to buy businesses on very attractive multiples. So the business trades on a PE of about 14, and it's been able to pick up businesses on sort of 2, 3, 4, and 5 times EBITDA multiples. So there's instant sort of PE accretion when you're able to buy businesses on those low type multiples. So 2 of the businesses that it's bought recently in the last 18 months is a business called Southpack Laboratories and Australian Blister Sealing. So Australian Blister Sealing obviously does blister packs for pharmaceuticals, some of them prescriptions, some are sort of low-level prescription over the counter that you get through pharmacies. So they do that on behalf of multinational businesses. What excites us about the business, we've been down, we've met management, so it's got a new management team. They're quite young, they're invigorated, and they're very keen to grow the business, and they've shown good success in being able to identify acquisitions and pay the right price for those businesses so far. So they've also diversified the business by making divestments of businesses that they now see as being non-core to the operations of the group. So they're allocating new capital to finding acquisitions, but there is still a very strong element of organic growth within the business. So since the company's had this strategic sort of new strategic focus, and it's got new management in there, it's been about 4 years, they've been able to increase the return on equity from low 5s, so around 5%, up to about 8%, which is quite significant in terms of the profit that generates on the new acquisitions that are being made. I put up a share price here. You can see that the company sort of drifted around that sort of 50 cents level for quite a few years, but really since the end of 2017 the market started to appreciate management, what they're doing, and see how those acquisitions are transferring into profit and generating good profit growth for shareholders. And we think that this is just the start of the journey for this company, and that there's significant upside from here in that business. As I said, look, the clients are all large multinationals, companies like Pfizer, Procter & Gamble, Johnson & Johnson, Blackmores. They're all clients, they're all long-term clients. It takes a long time to set up the tooling for making pills and things like that, and having the labels and getting all of the manufacturing process right for those products that are being manufactured on contract. So once the company's in there, it's a lot easier for a multinational, if they're happy with how things are going, just to renew that contract. So that provides a very stable element that we're happy with. Contracts normally last for about 3 to 5 years, and in the last 5 years, Probiotec hasn't had any major contract losses. So that's resulted in organic growth of about 20% per annum. And so last year we saw 20%, and we're expecting about that 20% level of organic growth, which with an aging population, people looking more at healthcare and things like that, it provides a good underlying level of demand for the business, and it's not subject to economic factors, so swings in interest rates and things like that. So in terms of the acquisitions that they made, the group acquired Southpack in FY18, and then FY19 they acquired Australian Blister Sealing. Both were acquired in between 4 and 5 times EBITDA, so very attractive. And as I said, look, with the Probiotec trading on a PE of 14, that gives them instant accretion in terms of PE multiple uplift by buying those businesses. They're still continuing to find attractive businesses to buy. So recently they've announced that they're going to be buying a business called, or the assets of a business called Australian Contract Pharmaceutical Services. It's in the same area. They get synergies from putting all of these businesses together, and we'll show you here's a EBITDA chart of what they've got, and you'll see in terms of this year they're expecting about $4 million worth of synergies from all the businesses that they're putting together. So Australian Contract Manufacturing was bought on EBITDA multiple of 2. So these businesses are very, very cheap. Management's been good at buying the businesses, and you'll see there from forecast numbers that the company's got out there for FY20. They're looking at annualized EBITDA of $17 million, and you compare that with $7.7 million worth of EBITDA in FY18, so it's quite significant growth, and that's one of the reasons why we're quite optimistic about this business. In terms of the numbers, FY19 business did $80 million in sales. We're forecasting $120 million worth of revenue in FY21 and $105 for FY20. The corresponding EBITDA for $120 million worth of revenue is about $20 million, and that puts it on a PE of 14. So, we have a valuation in the threes, early threes for this business. There's significant upside from the current $2 share price, and we think it'll do well as a long-term addition to the portfolio. So I'm Michael Glennon. Thanks for watching.